Hi everyone, welcome to my Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. My mission is to become the Google map for hardworking Canadians seeking financial freedom. And today's topic is specifically for real estate agents in Ontario seeking to set up a corporation. Many ambitious realtors that plan to take their business to the next level struggle with one question. Should they set up a personal real estate corporation or should they set up a brokerage for it? And today I'm going to go through the analysis that I typically set up with my clients to help them make the decision. Now, before I get too much into depth, every week I send out an email about money saving tips and real estate tax tips, all designed to help you build your long-term wealth and live life on your terms. The email takes 5 minutes to read and over 10,000 Canadians get it. Think you'll like it. Sign up using the link below. If you are one of the ambitious realtors that plan to take your business to the next level, you may wonder when you try to set up a corporation, should you set it up as a personal real estate corporation or should you set it up as a brokerage? These realtors create system for themselves to generate consistent lead flow. They invest a lot of money into their advertising. They hire showing, buying agent, listing agent, showing agent, and have a team building their empire. Some real estate agents prefer to set up a brokerage to keep the entire team's revenue in-house. I set up my mini brokerage for tax purposes years and years ago, and I no longer have my brokerage. Others prefer setting up a personal real estate corporation, a Prec. The process of setting up a brokerage can be pretty cumbersome. A brokerage is required by law to have a broker of record. To become a broker of record, someone must be holding a broker license and be the broker of record. In Ontario, to become a real estate broker, on top of the brokerage course that a real estate agent need to take, you also need to take 2 additional elective courses. It can be quite time consuming to complete all of these necessary educational courses to obtain your broker license. So you may wonder, is it worthwhile? Is there any significant difference between setting up a Prec or a brokerage? Absolutely. Below is the high-level business analysis of setting up Prec or a brokerage. When I talk about the benefits of operating a real estate brokerage, it is important to note that these are also the limitation of operating a Prec. Conversely, when I talk about the downside of setting up a brokerage, it is important to note that those are also the benefits of setting up a Prec. Now, benefit of setting up a brokerage. The entire realtor team's earnings are reported in one corporation. As a result, it's easier for you to analyze the team's performance as a whole. Recording the team's performance in the entity makes the business more saleable. Without a brokerage, you have to show the T4A of the individual team members to support the sales number. Buyers may not place the same level of trust in your sales figure. If you gather if you have 5 team members, you gather the 5 T4A and add them up together and create the financial statements, is not necessarily as strong and evident to substantiate the sales claim compared to having a corporation reporting the entire team's income and expenses. It makes it so much easier to sell. Selling an individual team is generally more complex than selling a brokerage. If you eventually plan to sell the entire team or the brokerage, you can choose to sell shares as well. By selling shares to a third party, you can potentially qualify for something called a lifetime capital gain exemption. And this exemption amount can be up to $892,000 in 2021. This means that you can make $892,000 from selling your brokerage tax-free, provided that the brokerage complies with the requirement as qualified small business shares and not pay any taxes. Now, opportunity to have different ownership structure with a real estate brokerage. Prec, typically, the personal real estate corporation requires that the realtor is the controlling shareholder who owns 100% of the equity shares of the corporation. A brokerage does not require that. This means that your family members and non-realtors could also own equity shares of the brokerage. You can even set up a family trust to own the shares. The sky is the limit with the brokerage ownership structure. If you sell your brokerage shares, your family members who are also shareholders of the brokerage or beneficiaries of the family trust who own shares can also enjoy their lifetime capital gain tax exemption, meaning that $892,000 tax capital gain that you can potentially save is also applicable to your immediate family members who own shares of this brokerage. So you get to save even more tax when it comes down to selling the business. With the brokerage being so flexible in terms of share ownership, easier to sell, what are the downside of setting up a brokerage? Well, the downside of setting up a brokerage includes like the board registration fees. In Toronto, if your brokerage needs to register with the board, you have to pay a one-time registration fee of over $5,000. If you're operating under any brand name, you need to pay something called a franchise fee. If you choose to operate as a franchise, such as the case in Remax, Keller Williams, Coldwell Bankers, you are required to pay franchise fees to use their names to market your business. This can be in the form of a one-time payment or multiple payments, annual payments. And then on top of that, you may also need to pay an annual contribution on top of the one-time franchise fee. And this could be a substantial amount. Now, legal and accounting fees. You will also incur additional legal and accounting fees to review the franchise agreement at the initial setup. And you're also required by RICO in Ontario to have a unique address. RICO wants you to have a unique address that you have for your brokerage. You will need to rent a space for registration purpose. In addition to all these extra costs, there's also additional software cost. Many brokerage use a system called Lone Wolf to run their brokerage business. The cost of purchasing and maintaining the system can be high initially. And lastly, there is also high maintenance cost. The brokerage needs to take care of the reconciliation of the commission trust account, the client deposit trust account. These accounts must be reconciled on a monthly basis according to the law. And so it requires more administrative effort. A broker of record typically get involved when the realtors have conflicts or complicated deals. If you set up a sub-brokerage, you are the broker of record. Therefore, you will likely have to handle any conflicts, complaints among all the agents that are registered with your brokerage. RICO may even require the broker of record to attend mandatory training in case anything happens, especially if the realtors breach any code of conduct. Nevertheless, it is not all black and white. We're here to help you navigate the pros and cons of each option so that you get to make the most informed decision based on your goals. Make sure that you talk to us or someone that actually knows real estate agent, real estate taxation, and realtor taxation before you make your decision. Now that we have covered the pros and cons of setting up a real estate brokerage versus setting up a Prec, make sure that you give us a thumbs up if you like our video and share our video with the people who may have the same questions. Until next time.